Okay, it is just after 9 a.m. on Friday the 25th. So I thought I'd do a little kind of process video of how I prepare for the open and what I look for. So those of you who have been following me for a while, you know that I write the Premarket Perspectitve every morning. If you're interested, you can take a 5-day free trial to this. Maybe this video will get you thinking about the open in a different way. But what's also great about this for me personally is that I really enjoy writing this short letter every morning to subscribers because it does a lot for myself as well. It really kind of puts my process into like a system, sort of, so to speak, where I make sure to look at all the different things that I need to be looking at the open and how they may have influence on what happens in the regular trading hour session. So let's just start with the market profile here on the left, and then I'll get into the report on the other side here about what I'm writing. So obviously, as I was saying, it's Friday morning, and the activity here in the market profile is always separated out from overnight session, which is this, and the RTH session, which is this, which is yesterday. And the prior day's session always has lots of very, very important reference points that we can look at that'll give us clues as to what may happen in the current session. Obviously, that's how technical analysis works. You sort of look to the left. And that's also how market profile works, where different areas of the distribution of the day's prices, those areas have different amount of time spent there. They have different amounts of volume traded at each price. And all of this is pretty important in terms of the next day. So what are some of the things that I'm seeing in the profile? The first thing that I do when I come into the office every morning, when I start to look at charts, is I start to mark off the key areas on the chart that may be of interest. So some of this is relatively nuanced, and it takes a little bit of time to really get a handle on, but it really is extremely valuable. Those of you who have been following my work for a while, you know that this stuff is just spot on. It's amazing how powerful market profile is. And when I started learning this stuff from Jim Dalton many years ago, it really just kind of took my game to a whole other level. It's really amazing. So what I first start doing is I just start marking off some of the obvious potential inflection points. So we know that we have a fresh new overnight high here, and we know that we're opening on a true gap. This is the current price action here, which is the green line, which is where we are, and it's a true gap because it's above the prior day's high, so it's completely outside of range. So I've marked off the overnight high. And I've also marked off the RTH high, which is the high of yesterday's session. And this high is somewhat interesting because it is equal to a prior high, which makes it a weak high. And there's also an overnight session here that also topped out at the same area. So if we look back to the left, we have some pretty good ideas. Say, aha, this 45.15 is obviously quite important, and we're going to have to watch closely to see how prices react at this area. And then also notice that when you look at the overnight distribution, when you look at how prices traded in the overnight session, it is probably a little bit more than just a coincidence that the widest portion of the distribution, where the greatest amount of time was spent last night, is where? It's all kind of coalescing around this area. So even before the day starts, I know that this 45.15 is probably going to be important. Now, the way that market profile works, when you have like double tops and triple tops here, you have like a number of sessions that have all topped out in the same area. We call that type of high a weak high because it'll probably get toppled over in the next session. And I talked about this near the close of business yesterday. With my subscribers and Weekly Options Advisor, I said, watch the overnight session tonight because we were having a private webinar like we do every Thursday. And I was seeing the market close here, and I was saying, you know what? I bet you this market's going to be up overnight because, it's very easy to topple this area, at least temporarily, because there have been multiple highs at that area. And as you can see, the overnight activity did go quite a bit higher. We went all the way from 15 all the way to 32. So, theoretically, you could have just bought futures at the close and looked for some rally overnight that you could have exited there. So this area is obviously going to be important. The other thing I would say is the way that you look at these weak highs is that if price was to be opening here below, then we would look for that break in the RTH session. But this session is a little bit interesting in that the break happened overnight, which according to market profile theory, it doesn't repair this area. So this area is still in need of repair, meaning that we need to see some RTH structure, to build out some sort of profile shape here that is above this area, and that's what we call repairing, to repair that sort of area. There's also a concept in the profile of not only highs that are weak, but highs that are poor. And it's interesting also, and I'm just kind of pointing this out because it's yet another thing in the confluence of all the things that are coming together at the 45.15, is that yesterday's high was not only weak because it came right to a prior high, but it was also what we call poor. And a poor high is one that has some sort of deficiency in structure. And when I say deficiency in structure, I simply mean that the market profile should look more like this. It should look more like a very traditional type of bell curve type situation, bell curve distribution, where you have kind of a fat part in the middle and you've got some excess on either side, where you've got tails on either side. And when that doesn't happen, you'll notice that this one is completely missing the tail on the upside. We call that poor. It's like a word for poor structure. And that's also something that needs to be repaired. And it's fantastic because it gives you great clues, again, as to what might happen in the next session. You say, we have this poor high. Here we are trading down in here, blah, blah, blah. I'm trading futures. I'm looking to get long. Where's my target? Well, maybe instead of taking a little target, just a few ticks or a few points higher, you go all the way for up here because you know that if you retest this, that poor high needs to be repaired. Okay, so this is just a good example of some of the different kind of little tricks you can use with market profile. All right, so once I've marked off the levels that I feel will be important, I go through the profile, kind of eyeball it and see what may happen. So I know this overnight high is important. Obviously, this 45.15 is important. I've marked off the overnight low here. And then down below us, I'm thinking this is a virgin point of control. If the market was to get really weak and we had a very large liquidation break, there's potential that this VPOC gets tested because it's an area where the most volume was traded here on March 21st, but notice that no subsequent session has ever tested that area. So we call that the point of control, and it's called a virgin point of control, or VPOC, where the area is untested. Very often on larger breaks in the market, when there's a liquidation break, you will test these areas very quickly, and it's fun to use them as targets for downsides on futures trading, all right? So now that I've marked off my levels, and again, I write this in the morning, it comes out at 9 a.m., but I'm using it as a reference point to sort of, walk you through what I'm thinking of. I start to think about what the pre-market indications are of where we are opening in relation to the overnight range and in relation to yesterday's range. So the first question I ask myself is I say, are we opening in or out of balance? And the answer you can see today is that we are opening out of balance. And what does that mean? That simply means that we are opening outside of the prior day's range. And sometimes we can talk about balance in terms of a larger balance area, but in general, when I look at the pre-market indications, I just want to know, are we opening outside of the prior day's range, which gives us what I call a true gap higher. And this is what we call a true gap because we're opening outside of the range. So we've got a true gap, we're opening out of balance. Now, what is the situation with the overnight inventory? This is the overnight range, and the overnight inventory is a question that we ask ourselves. We say, is it balanced, or is it net long, or is it net short? So, and it's important to know because the way that the overnight activity coalesces around the prior day's close tells us a lot of information about how potentially prices will react early in the session, right? Because think about it, if everybody's long from the close, there's more of a chance of a fade, meaning you'll have a counter trend move back down because those overnight players generally have pretty weak hands and they want to take those profits quickly. And if they don't get a market that rallies immediately off the open, or if the market rallies off the open and then comes back down through the open, right? That's a fantastic short signal because those people are going to liquidate because they're weaker hands. So it kind of gets you thinking about the psychology of the overnight players and how they may act as the day opens. So in this particular case, on this Friday morning of the 25th, the overnight inventory is what we call balanced. Okay, it's very balanced because notice that if you eyeball it, about half of it is above the close and half of it is below the close. So that means that we have balanced overnight inventory, as opposed to, for instance, yesterday, this overnight inventory is 100% net long, which means that there's added potential that the market may be weak off the open, right? Because some of this needs to correct. So again, it's just a fantastic way to get a good perspective on what the inventory situation is of players and what their bias coming into the market may be, all right? The next thing I look at is I want to know where is the current price in relation to the overnight range. And I just kind of eyeball it and I divide it into thirds. So you can see if I divide it into thirds, we're in the upper third. So I've written here upper third. And that also just ties in with what I was just saying, that if it's, if we're opening up on a true gap higher and we're up in the upper third, well, there's decent odds that we kind of retrace a bit off the open and we come in a bit. Whereas if we were, let's say, opening in the lower third here, then I would say, okay, well, how much fade could there be off this move? Because it's already corrected off the overnight high. It's already come down so much and it's in the lower third of the overnight range, all right? Next thing I ask is there any shock and awe? And what is shock and awe? And by the way, if you're a subscriber to this, you can just mouse over any of these terms and it'll tell you exactly what it is. You can see it, the little kind of underline here that shows you where these terms are tooltipped. So in the shock and awe, it's just a term that I use to describe what overnight futures traders might be feeling when faced with an open that is wildly divergent from what they expected, such as large gaps in either direction, etc. So do we have some shock and awe today? I generally say yes when there's a true gap. It's not a gap that's opposing, the current price action. Like a real shock, a real shock and awe, would be if you had like a market that was, say, trending down, like 3 days lower, and then the gap was to the upside. Okay, that's a lot of shock and awe, right? Because everybody's short and they're like, holy cow, what just happened? Like, as soon as this bell rings, I'm screwed, so that's that, right? Is there potential for early trade? So this is either a yes or a no every morning. And generally, my rule of thumb is that if you open inside of range, this is a no. But if you open outside of range, it's a yes, because there's potential that you can take that fade trade back down to the RTH high, all right? And then the last thing that I mention always is I just want to get a handle on what's my short-term bias. And in this case, I've kind of kept it the same for like about a week or so now. I've just said the primary downtrend is broken. That's just kind of in the bigger picture. All right. Key levels for today. What are my key levels? Don't need to spend too much time on this because this is really just a rehash of something I was just talking about, where I just mark off my levels here. I just write, this OVNH, I put the exact levels what people need to look for. And then here I write a short commentary. And here, obviously, I'll go through this now because I want to, again, I'm talking about how I think about the open and what I'm doing. So I say, first true gap in some time. That's true. We haven't had a true gap in a while. We've had all inside gaps where we've opened inside a range. In keeping with the current ruling reason, it's to the upside. What's the ruling reason? Of course, it's like the zeitgeist or tone of the market. That tone is very bullish, so hence I'm saying that it's no big surprise that the gap is higher. Overnight inventory is very balanced, which lessens the shock and awe somewhat. Just talked about that, so you know exactly what I'm talking about. Yesterday's RTH high was weak and rather poor. This is again what I was saying when I first started the video, talking about the 4515 Evler. However, the overnight activity does not officially repair that structure. We talked about that. This area will be of note. Again, no need to rehash that. We know the 4515 is important. And last but not least, my overall takeaway here is that the market continues to be overbought in the short term. That should be obvious to anybody watching. And the potential for a liquidation break is increasing. Remember, what is a liquidation break? A liquidation break is not a real bearish downward move. It's more when too many players get too long with bad location and what I call sometimes crowding the plate, and they all have to liquidate at once. It's kind of like that last in, first out type thing where, that's a liquidation break. And usually what will happen is they'll come basically out of nowhere, they'll come out of a bullish pattern, and they will usually repair themselves very quickly. It'll be like a big V-shaped kind of reversal. It'll be short-lived, and there usually won't be bearish underpinnings. There won't be bearish internals and context confirming it. It'll just be kind of a quick break. All right. Next thing I do is I mark off my VPOCs. So those of you that read this report every day, you know where the virgin points of control are. And then, most importantly, now I start to formulate my scenarios. I start to think to myself, okay, how could this potentially play out, right? It could either be up, down, or sideways, but how can this play out? And when I write the scenarios here, I usually like to say how I feel about it in the order of how I think they may occur. So you can see the first one here I'm saying is, although the overnight inventory is very balanced, there is still potential, albeit lower, meaning albeit a lower potential, for an early fade. So that means that there could be potential for an early counter trend move lower, where we kind of rotate, we rotate to the downside and we get, at least some action to the RTHI, and then we watch this 45.15 closely to see if there's potential for further move lower. All right, so we'll watch how prices react to that area closely, as there is confluence of nuance at that level. Okay, now what would happen if we got a larger break lower? If we got a larger break lower, it'll probably take out the ONL, that would define it as a larger break, and find some acceptance lower than that low, meaning could we get below the ONL and find some acceptance and spend some time and volume lower, more in the meat of yesterday's value area. Context will be of paramount importance on such a move, and this is important, right? So I'm kind of reminding myself and my followers what to think about. Do not get sucked in to what may only be a mild liquidation break if the internals and tempo and tone don't confirm. And that's important because remember, when the market has been up for a while, often short-term traders will get mesmerized by what they think is gravity in the market, and they're like, oh, we're so due for a down day. This is the one. We're going to have a big trending day lower, but they don't know the difference between a liquidation break and stronger selling, and they get short on liquidation breaks, and liquidation breaks then rip back in their face to the upside, and some losses are incurred. All right. Last scenario, a bullish bias today will be characterized by either a complete lack of fade, partial fade, or a full fade that rejects at the RTH high and finds some acceptance higher. Again, context is king. So what do I mean by that? Obviously very simple, meaning a complete lack of fade would be that we get no downward movement at all, right? Nothing happens. A partial fade is we come in a little and we don't touch the RTH high, or we get a full fade that comes down to that level and rejects and comes up. Those would be the bullish outcomes. So again, the whole point of this is, remember, I don't know what's going to happen more than anybody else out there. I have no idea, but I'm thinking proactively and I'm taking note of as much nuance as I can to give me an idea of what might happen, so that when those scenarios start to play out, I'm not surprised, I'm not scared, I'm ready, and I'm already thinking in that manner, say, aha, I think it was James Dalton, I'm not sure, but I've heard the phrase used where people say, you got to figure out as early as possible what's the game that's being played. And it's that, basically. So once I find out, aha, okay, this is the game today. Okay, the market is actually super strong here. There was no fade. It's not testing the RTHI. The market doesn't care about that 45.15. It's ripping off the open. We're taking out the overnight high. Okay, I get it. I see what's happening here, right? Or, the early move is weak. Boom, take out the 45.15, move lower. Oh, okay, maybe the overnight low is in play. Okay, here's, what's the context, what's et cetera, okay? So that's the thing, all right? And that's basically it. That's basically, in a nutshell, how I look at, the activity, before I come into the session. And then just to wrap it up here for a moment, the last part of the analysis. And it's funny because a lot of people say, oh, you have to go top down. And obviously I do go top down because I obviously have a very good feel for what's happening in the broad market. But once you get all of your market profile, ducks in a row, everything that we just talked about, Obviously, you want to make sure that your TA is sound as well. TA is of utmost importance. I never want anybody to think that I'm a strictly profile trader, because I'm really not. I'm a hybrid profile technical analysis trader, and I actually lean more towards technical analysis. I do believe that what's going on in the charts in the bigger picture is usually more important than the nuance of profile. But when you put these two things together, they're extremely powerful. So I always want to start my day also looking at starting with a daily chart and then moving down to a 15-minute of the major averages, especially S&P, just to kind of give me an idea of where we are in relation to the bigger range. So obviously in the bigger picture, I think the market's looking towards the 4,600. Right, we could go there, and this kind of informs my thinking in my weekly options advisory trades and my, my sort of the way that I swing trade options on that, 2-day to 14-day period. This sort of technical analysis kind of informs that. So I do want to just say that I always take a look at what I'm seeing on the daily chart, how far we could go. Next thing I would do is I kind of drill down to a smaller time frame, and I'll go on the 15. And I'll mark off trend lines, without a doubt. It's very, very important. Again, you don't want to just get too caught up in the nuance of what's going on in the profile only, because what's going on in the profile may be completely, in denial of what's happening technically. And like I was saying earlier, if you like this report here that I write every morning, where I put all of my kind of, ducks in a row here, and I put all my thoughts in order, you can get a free trial to this right at our site. You can see here I'm clicking right on where it is, and I apologize, that's the members area. This is where they are, but I go in here and it's actually right in here under Peter's Premarket Perspective. So if you're interested in getting my thoughts every morning in this manner, as you can see, I say you can understand the futures market, so stop guessing. You can take a free trial here right at our site. All right, so hope to see you there.